that's a signal that we're going to the commodities market. And we have Bolanle Agbaje, analyst with Financial Derivatives Company, joining us for the second time this week. Good morning, Bolanle.
Hi,
good to have you again.
Thanks for having me.
Yeah, so we talked about oil, and then we saw that, we have releases coming from IEA countries, the US, and that's maybe temporarily we'll have
the fact that they've tried, with OPEC, and OPEC hasn't, done as much as what the US wants them to do. So it makes sense to rely on, the IEA and obviously the US stock reserves. In the meantime, I'm not so confident that the added supply would actually make oil price, decline to below $100. We're confident that.
But we have the WTI is 96 or so.
Yeah, so our own benchmark is usually the Brent crude, and that's what we follow. And for Nigeria, it's more or less the price that we do or that affects us. And $100 per barrel is not, it seems reasonable, at least in the short term. I don't think the supply added would have any significant, impact.
That's sad, in spite of all the efforts, 60 million, 120 million and all that.
Yes, like I mentioned, Saudi had already even increased prices, and they've weighed options and looked at the fundamentals within the market, and it makes sense, for them to raise prices and still get the demand that they require.
Yeah, because demand is out there now, supply is really low.
Exactly.
Well, let's talk about gas. Nigeria is asking the NLLG to increase its output. First, what is their capacity? Can they do better than
So their capacity is usually about 22 million tons a year. Right now, they're only producing about 70% of that, which is not necessarily great. I had mentioned on Tuesday about the fact that, some of these EU countries are looking for other countries to actually buy from.
Yes.
And, Nigeria is usually one of the countries that should have been considered. Algeria is one of them. But the fact that, so we had always looked for what exactly was the issue. We obviously knew the pipeline, the cost and all of that, but hearing that this JV agreement with Shell, NNPC and some other corporations, as well as Nigerian LNG, they've mentioned the fact that they don't want to allow third-party operators pass gas through their pipelines, which is ridiculous at the moment, because at the end of the day it benefits the whole country if we're able to supply and keep exporting, at least maintain the market share within the the
and I'm sure economy. It's not for free, it's all business.
It's all business, but I think that their main concern, especially some of these partners, they mentioned the fact that they would only allow some of these third parties if they're passing gas at a subsidized rate. And for some of them, the cost environment is relatively very high at the moment. So it doesn't make sense for them to reduce their cost at the moment to pass gas.
Operation cost is high.
It's very, very,
but
very
why
high.
are they still at 70%? I mean, there's the demand. In fact, I think for this year, was it this year, last year, all their supply had to be channeled to domestic domestic demand.
We've had the issue of gas flaring, the fact that there was the focus was always on oil. So this gas has always been secondary when it comes to the Nigerian
economy. So it doesn't have investment.
It doesn't have as much investments. The fact that we're still relying on the same pipelines, we haven't increased the number of pipelines that we have. I know for LNG they have about 6 trains at the moment, a 6-train complex. They're looking to invest in another one to make it a 7-train. It's highly cost intensive. So it's not as easy as one would think. And considering the fact that, this hike in gas prices has been there, yes, but the focus had always been on oil because it generates better revenue. And we obviously had our trading partners. But right now, it's a loophole in the market, in the world economy. So it's left for Nigeria to actually market, territory when it comes to relationship with some of these EU countries.
And I know that NNPC Limited has been talking about pipelines for gas.
Yes.
In fact, the matter came up in the House of Representatives. I think it was last week, and they are probing, and we have so much money. We have I think we have like 3 major pipeline projects that seem at the moment we just have some money pumped into it, and we don't see what's going on.
Like I mentioned, Nigeria, we have a problem with actually going through with some of the plans that we have, especially the cost-intensive ones, just because you don't reap the benefits of it until the project is finally finished. So it's less incentive for them them to, you know, keep going on with certain projects when you have, you know, some of these other commodities that are actually booming. So I think that's the major problem. But if there's, I think also the lack of discipline within the Nigerian, you know, economy and the Nigerian government, if there's actual discipline within that space and they actually focus on, you know, some of these projects that they have and not caring about whether they actually see the short-term benefits of this and focus on the longer term, you know, it would actually make the country better, I think.
Yeah, but, you know, when you talk of gas also, apart from for foreign exchange and all that, I think it's being underused in Nigeria, because I learned gas can be used for power, can be used for fertilizer, it can be used for a whole lot of things, but we're not exploring, and we're wasting the gas.
Yes, because, you know, the gas that we actually produce is in its natural form. Yeah. To use it for some of these, you know, other channels that you've actually mentioned, it requires a lot of technology, and that has to, you know, change or convert this gas to what it's supposed to be used for. Like I mentioned, that requires heavily capital intensive, and it's not, you know, something that most people, they would rather rely on the project, on the existing technology that we have at the moment. So that's usually the major challenge, and it's not even
we're looking for how we can send the raw materials and get the finished product.
Yes, and it's not even profitable for some of these private investors, because I'm sure, you know, you've had a lot of private investors that would actually like to, you know, partner with the government and, you know, make investments in this space, but, you know, the environment is just not, investors are not safe in this kind of environment.
Yeah, so. And I remember you mentioned that on Tuesday when I asked about why can't we attract foreign investment for the pipeline, and you asked, I mean, when there's no assurance of security.
Yes. So, you know,
the political scene also is a factor at this time.
Yes.
We have a major election coming up,
and, you know, some of them, this is not just the right time to actually bring your money in for some of them as they think. And, you know, right now you see the dollar goes up and down. Some of them are not sure what they would be taking back home. You know, would their money decrease in value? Would it decrease in value? So all of those uncertainties would prevent, you know, some of these investors from coming into the market.
So it looks like for now we just have to keep talking, and
we have to keep talking.
For a new administration.
Yes,
doesn't look like major.
Be hopeful that the new administration actually follows on with, you know, some of these plans, because I think the change in administration always creates a shock in the economy, because a new administration obviously has new plans, has different ideas,
different vision,
exactly,
approach.
And it usually takes, there's also a lag, you know, it takes some time before, you know, they adjust to what they actually want to do within the economy. So all that usually affects.
And sometimes I think what we've also noticed is when politicians are about to take power, they make a lot of promises, and like they're not in touch with the reality, and so when they get in there,
they're all kind of overwhelmed. And
yes, exactly. By the time
that could be a factor. Yes, that could be a factor as well. But also, you know, when you're looking at the Nigerian government, the different arms, there has to be collaboration between the different arms, and I don't think there is at the moment.
Yeah, we've talked about interagency rivalry.
Yes,
in so many areas. Well, moving from that, we have Afreximbank setting up a $4 billion trade fund.
Yes, so it's actually in response to this Russian-Ukraine trade war, and it's kind of, you know, there to help many companies and countries, African countries, to cope, you know, when it comes to imports and exports. I think they mentioned that they had actually received requests of about $15 billion, you know, but this $4 billion is not even scratching the surface. But at the same time, you know, they're committed to helping, you know, the African economy to
So how would this work? A company or a country?
So I think they would lend to both companies and countries within the space, and obviously consider projects that, you know, are focused on the import and export of commodities within the African space, because we're heavily, you know, commodity abundant, and, you know, we're not really tapping into it and taking advantage of this, you know, situation or this divide within the Western world.
You know, somewhere in my mind, I just wonder why African countries can come together, you know, and use the comparative advantage policy or principle, or you have this advantage, you focus on this, channel all your resources, or at least majority of your resources on this, you did this, and then at the end of the day, we exchange, and I think the continent would just have things easy.
Well, research actually shows that it actually depends, or it's as a result of how, each of these African countries were actually colonized. Some were, resource dependent, and, you had some extractive institutions in those, countries, and also in other African countries, you had growth enhancing institutions. So that history actually created, that shake within, some of these African countries. Like, for example, Botswana, you don't hear of Botswana complaining about corruption within their diamond industry. They actually had growth enhancing institutions within the market, within the economy. And well, with Nigeria, it's mentioned that, we had, extractive institutions, just because Nigeria at the time when colonizers came, they didn't have, it wasn't a favorable environment for some of these colonizers to actually settle in. So they took and left. But it's a story for another day. But that's usually the history of.
But that's the foundation of some of the things that we see.
Yes.
Also, following the war going on in Ukraine, global trade is down 2.8%.
Yes. So, like expected, a lot of companies refuse to, trade with Russia at the moment. However, the EU is a particular one in the sense that some countries have, opposed trading with Russia, but countries as big as Germany within the EU has actually come out to mention that, they're not actually going to stop, this trade with Russia.
That's the energy one.
Yes.
Because
the oil,
they don't have...
They're heavily dependent, and they don't have any alternatives at the moment. And I think they had only settled with the fact that they will focus on coal, which is actually, going to be done in phases. So coal is less vulnerable. They will stop, trading coal with Russia. And also, Russia had mentioned that they only want their currency, the rubles, to be traded with them. I think Hungary had accepted that they would do that.
Yes,
so you're having
one European country has accepted that.
Hungary. So
they're even paying the bonds now with rubles.
So it's a divide within, some of these countries. But I think the general idea there is to reduce, trade with Russia, just to make sure that, they feel it, and they kind of reduce what they're doing to Ukraine.
Yeah, so I just wonder, I pray that the war ends soon, and I wonder if countries will go back to status quo after the war, or they will just keep at, want to cut off with Russia.
Yeah, I think the war would actually create some long-lasting, negative effects. The world that we know it now would actually change. Trade, globalization in itself is going to definitely change, and it's just what it is when it comes to, what's happening.
All right, what else is going on in the commodity space?
Yeah, well, in the commodity space, we're seeing mixture of fluctuations in the price of some of these commodities. I think the price of gari and tomatoes have increased slightly, but we're still seeing consumer resistance. But nonetheless, we do expect that commodity prices will actually inch up now that we're entering, or fully entering, the planting season. Yes. All
right, Bolanle Agbaje, thank you so much for sharing your thoughts with us this morning.
Thank you for having me. Thank you for having me.
Enjoy the rest of your day. All right, so from the commodity space, of course, we do have other conversations coming up, but that will be after the break. This is Business Morning on Channels Television.